if you'd have told me 25, 30 years ago that we'd have had 7 million acres of beans in North Dakota, I'd have said, get out of here.
Hello and welcome to Fish Wrap TV, episode 30. Today is Friday, September 17th, 2021. I'm your host, Janie Hansen, here in sunny Blue Earth, Minnesota, along with Q Lair for your weekly market update. Big story this week was the CPI report. We'll also cover freight, along with the ongoing inflation and natural gas picture. All right, Q, tell us more about that Consumer Price Index report.
Well, it was probably the most surprising thing we've seen in a long time, notably because it was weaker than expected. Because we've really had inflation running through the numbers. With the PPI going where it went, was nobody expected it to be 0.3 instead of 0.5. Mm-hmm. Doesn't sound like much, but it's really shows that there is a disconnect going on, and what is really coming has not hit consumers yet, which is pretty scary if you think about it.
There's been some more cushion on the wholesale side of things,
yes,
yet that it hasn't flowed all the way through to end use.
Precisely, and that flows through right into the freight problem. We've been discussing week after week. This week we had a new high in freight for a container from China to the west coast of the United States is now $20,500.
Okay, and what
per
was
container.
It before?
1,000 to 2,000.
Whoa.
Yes, so it's 10x, and not only that, but then as we talked about earlier today, there's a backup. Here in Los Angeles, there's a huge backup in China. Mm-hmm. It's still with these freight rates. So the problem is that people are trying to get natural gas tankers to get overseas. There is a huge problem in Europe. I mean, huge, with natural gas, with this Russian thing that we've been talking about for the last 2-3 weeks. Mm-hmm. Russia has told them that the gas backup is going to continue because they're still trying to get their stocks to where they want for their winter. And we all know about Russian winters.
A little chilly.
Just a little chilly. Just ask Napoleon or Hitler.
Yeah, I thought Minnesota was bad.
Yeah, you think Minnesota's bad?
Not quite Siberian.
Yeah, try Siberia. But, gas is now $5.50 plus here in the United States. Hit $5.78 this week in December, which is, it was under $2. Mm-hmm. Not 10 months ago. It's trading at $16 in Europe right now.
Okay.
And
plus, that's what you said, freight is they're getting tankers for the natural gas is what's putting the pressure on the freight markets.
Right. And a natural gas outfit in the UK has closed because of bad hedging. And a fertilizer plant in the UK has shut down because they will not pay these prices to gen the ammonia for fertilizer like we've been talking about. So, it's really a situation where it's going to get real expensive for a lot of people this winter. So, I know nobody's listening to us in the Northeast of the United States, but, be prepared because, last couple of years, nat gas has hit, 12, 15, 16 bucks there, and just stay tuned for this year because, if things get bad up there with, and they can't get heating all distillates, you could see a 2, which would be like a first ever.
Yeah. So, but what about grains? Harvest is just beginning. You hear how the market's reacting to the first combines rolling out into the fields.
I tell you, I've been around a long time, and this is a real snoozer. Corn is sitting here at $5, beans are sitting right there at 13, and those are pretty good numbers.
It's actually kind of refreshing with markets going crazy in other places.
Yeah, exactly. And margins are going down in the grains, margins are going up in nat gas, and all of the other distillates. So it's funny to see. One negative, one positive in the same report coming out of CME, but there you have it. But they've dropped the hedge. I mean, they've dropped the margins down about 10% as of today. Mm-hmm. So that's usually the first sign.
Less volatility, and the markets have stabilized a little bit.
Markets have really stabilized, and we've been setting in pretty much the same half standard deviation for almost 5 weeks now.
Okay.
With pretty much just a wiggle. Mm-hmm. Wheat, of course, is still getting a little bit stiff because of what's going on in Russia, because they just had unexpectedly not bad crop, but smaller than they thought coming out of the spring wheat areas. So everybody's getting adjusted. The prices are getting adjusted. Hard wheat is continuing to run, so that's picking up the slack, like we said. this year, I mean, if you thought this year was going to be the big year like '08 or 12, next year is probably the year if it's going to happen. If not, then it ain't going to happen. So just an interesting overall. I mean, the Fed is, I've been around a lot of years. The Fed has not been this dissed, in the what I call fintech world since G. William Miller, who was Jimmy Carter's Fed chairman.
And it's not just an effect of Twitter that it's easier to hear that chatter, or
yeah. But this was a guy that was so bad, and we had 21% T-bills and stuff like that, and then they brought in Volcker. So talk about going from Jekyll and Hyde, and that's about as big as it gets. But we got a situation here where the Fed is like we've been talking about, has lost control of this, and I mean, you've got low interest rates, but you've got high prices running. How can they contain? Because they have to raise interest rates. Is really the economic theory that we all studied in college. But if they do that, then look out for economic growth. So they're not between a rock and a hard place as we see in Twitter. They're between a boulder and a hard place.
So, well, any other things to keep an eye on in the week ahead?
Well, I was noticing that not only with KC going over Chicago, but we've got Oats has creeped up and put a 5 in front of it. So, you got to keep an eye on that. And of course, everything up here in the Northlands, had a dry, summer. But, you're showing people oats $5, spring wheat $9, canola $900 Canadian metric ton.
Yeah, so some of those smaller grains.
And it's funny because people are talking about going to peas, and for this what do you call it?
Yeah, the meat replacement,
fake
vegan
meat
products.
Stuff. Yeah, because peas are a big item in that. So there's a lot of people thinking about diversifying up here in this part of the country, and thank God, because like I said, if you'd have told me 25, 30 years ago that we'd have had 7 million acres of beans in North Dakota, I'd have said, get out of here. I mean, but of course, everything evolves and everything else, and people push as far as they can, the genetics. But, now we'll see if, $5 oats or something, some of these other prices, get them to think about, backing off the beans.
Yeah, buying some acres back from soybeans.
Exactly. So, China continues to buy, a little bit of new crop, but they're running behind. We just had the lowest corn weekly export numbers in about 5 months. So, these prices have squeezed off the Chinese. Of course, we're heading right into, planting for Brazil and Argentina. So everybody's getting a feel for what's going on there. The Gulf is opening up. So, that is also taking some of the volatility out of the market too. Okay. So, if the money runs to natural gas and crude oil, which it looks like it's going to, then this is going to be a long winter for the longs. And probably the shorts too. Yeah. Because we're just going to sit here and mark time.
Parked.
Because everybody's playing, natural gas, look out. I mean, they are just throwing around some money over there.
Yeah.
Big time money. So,
all right. Any other closing thoughts?
Not really. It's really a hurry up and wait now. Now the harvest is underway.
Mm-hmm. So, and for producers who want to hear more about the outlook for harvest grain sales, check out the website thefarmcfo.com for this week's Croptimize Hedge Report on the Croptimize Pro subscriber dashboard. Thanks for tuning in, and we'll see you next week.